stock of the day. Now, I got to say, there wasn't a whole heap of corporate news out today that we could really get going on. In fact, it's quiet on the economic front globally today as well. And even US earnings are what sort of headline numbers there. So what I did think we should do is talk about Chrysos. So I actually spoke with the CEO on the small caps just last week because the company had done a deal with Barrick Gold, one of the world's largest gold miners. Well, today Chrysos has completed a $75 million placement following that partnership with Barrick Gold and MSA Labs, which sees the company have the potential to deploy 13 of its assay units to Barrick mine sites across 4 continents by the end of 2025. So the cash balance will be pretty healthy after this raise, $108 million before costs, $22 million in an undrawn debt facilities. The company says that lenders remain supportive and they're in advanced discussions to expand debt facilities as well. So Chrysos says that the funds raised will strengthen its capital position to meet that contracted profile and to develop optionality to continue to expand along with its growing sales pipeline. Clearly, the placement, though, has taken the wind out of the sails of the shares today, currently down by close to 6%. So guys, I don't know exactly how familiar you are with this company, but it's a pretty interesting one. It uses technology, in the assay process at gold mines, but it's come out of the CSIRO. And since listing, its share price has done very well. I know you like to see more history in companies, but do you ever make exceptions?
Yes. But I wouldn't make exception for this one. Couple of things. I agree, it's a very interesting company, but at the end of the day, 50 million in sales a year, approximately, I think. Some CEOs have that for lunch money on the stock exchange. So it's very small. If you look at the daily turnover, that looks like a lobster pot to me. There's not much happening there in turnover daily. Which means you can easily buy shares, but if you want to sell them on the wrong day or on the wrong week, you might have some problems. You're right. I out of risk management, I always I put companies on my radar and I follow them for quite a while longer. I think today's placement also brings home one very important message to investors as well. When you're a small cap company and you sometimes have those big contracts, it often means you have to spend a lot of money because to serve that contract. And obviously that's in their case, that's exactly what's happening. So first come the costs. They are, to my understanding, they are just profitable, but they won't be profitable this year. And I can say that with confidence because there's only one broker that covers these stocks very closely, and I think that's Shaw and Partners. And they have a negative year for the year ahead, so they will not be profitable this year. Long story short, yes, of course. It's trading well since listing, or not since listing, but soon when we moved into this year. It's trading consistently now over the 200 moving average this year, which means there's solid support. You can add it to your portfolio. Don't put too much money in there. Personally, the type of investor I am, I have these companies simply on my radar and I give them a little bit more time to prove themselves because there will be downturns and the downturns will show you probably the information you need to know if you're intending to hold those companies for the longer run.
So there's the conservative view, but I do know that Shaw and Partners has a buy, but high risk.
Yes, so it's not my stock, it's my colleague's stock who put out a note last week. So buy rating, 750 price target last week. Shaw and Partners was involved in the placement with the other broker who also covers the stock. So there's at least 2 brokers that cover it. So take that full disclosure with a grain of salt. What I think is interesting about this business is the technology. It is displacing the old way of doing things. The old fire assay, what's it called? Displacing fire assays in geochemistry. I'm not a physicist, obviously not a chemist, but new technology. What's important? Non-chemicals, non-toxic chemicals. So if you've got a new way of doing something that isn't as toxic, that's safe for women to use from a fertility point of view, that puts more women into the mining workforce, like only good things can come of it. So for me, insider looking in, not my stock.
So that's an ESG tick.
It gets an ESG tick, but it gets just safe for human consumption tick. So that's why I think the partnership with Barrick Gold came. It's like, well, this is a non-toxic way of doing something that is already in strong demand. It's in the gold space, which we like. The gold price is heading back towards $2,000 an ounce. Last week's announcement really gives a tick of approval to the technology. So we think, or our analyst thinks, that that's just the first stepping stone. It should win more contracts over time to get to its profitability. And as we've seen, when companies move from loss making to profit making, it gets another leg up. So, it sort of fell after the IPO. It's back above IPO price now. It's back at the issue price overnight. Again, we've been trading for a couple of hours. But for those who like technology that's in old school mining, gold mining, this is the way of the future. It's backed by the CSIRO, so we like what they're doing. We like the company. On behalf of my colleague who can't publish for a few days, I suspect we're still going to like it post the raise, and we like it. We call it a buy. I think it's a buy.
There you go, stock of the day. Glad I asked, and we do get a few viewer questions about that one as well.